Hello everybody, this is Bill the Adjuster with your smart claim tip of the week. Do I have a gap in my insurance coverage? The answer to that question probably is yes. Policies have become far more specific, have put in specific limits, and have really put the homeowner or the property owner at a reduced coverage position, and they're probably not aware of it. So we call these coverage gaps. Most people are familiar with the gaps in Medicare, where you have to spend so much money to get covered, and they fall in, they call that the donut hole. So these gaps are becoming more and more prevalent in homeowner policy. The question is, where does that money go? And it goes right into the crack, meaning the gaps provide areas for the insurance company not to make a payment on your loss when you completely thought it would. And here's the hard part. You probably had coverage for it only a few years ago, and it slowly gets reduced from your policy. So being aware of these gaps, to look for those, having your policy reviewed, and asking the right questions might actually help. Some of the bigger gaps are they kind of snuck in these large percentage deductibles. Now they don't look large. So they look like a regular deductible on your deck page, and it says like 1%, 2%. 2% sounds pretty good. It says the insurance company is going to pay me 98% of my loss. I can deal with that. The problem is it isn't 2% of the loss, it's 2% of your policy. So if your house is insured for $500,000, which is not far off the average in America, that's a $10,000 deductible. That's going to put you in a position where most losses, being the average loss in America is probably around that, aren't covered at all because the average loss in America is below your deductible. Required roof openings. So most policies, known as the old industry standard special form HO3 policies, kind of common language, have coverage for interior water damage no matter really what happened outside. That's general. So these new policies come in and they have what's called a required opening by wind. If the opening wasn't created by wind that allowed the roof to leak, there's now no coverage. I actually saw a recent claim for close to $100,000 worth of damage that was excluded due to a new policy issue that had a required opening that didn't have it just 2 years before. Low limits for certain coverages where they'll cap out the coverage on that specific loss. A lot of this can be access or tunneling, and you'll see policies that have really low dollar limits for things that can cost considerably more. You need to be aware of that because let's say you had that loss 10 years ago and it was $15,000, $10,000, $5,000, whatever that number is. What if the limit is now $2,000? With the price of everything going up, these limits get put in place, you have far less coverage available. Throw that on top of a big deductible and you have no payment. I just saw a wildfire smoke limit in California of $5,000. The house was completely inundated by smoke. I mean, covered. So everything, picture you came home from a campfire night and how your stuff all smells like that campfire. Can you imagine it coming through your house all night? Everything in your house is covered in smoke soot, and you have a limit of $5,000. This house was insured for $2 million, by the way, and had a $5,000 limit. So just some of the gaps that exist, I could list many. Roof schedules would come right to mind, but I can tell you right now that there's a lot out there you need to be aware of. Get your policy reviewed by a professional, making sure you have the right coverages, and one of these gaps, you don't fall down that hole. Again, I'm Bill the Adjuster. I really appreciate you watching. Please share my video, and if you have any questions or you'd like to send me a specific tip to do, my email is smartclaim@metropa.com, and I'd be glad to help. Again, I'm Bill the Adjuster. Thanks very much.